Hello and welcome to our series on basic accounting principles. Today we're going to be talking about one of the most important reports that a small business can run to understand and analyze the health of their company and help them make better management decisions. And that is the profit and loss, sometimes known as the income statement. So if you've ever run a budget for yourself or for your family, you'll find that an income statement or a profit and loss statement is very similar to a personal budget. In an income statement or a profit and loss statement, we have our income, and then we'll want to know our expenses. So we want to know how much we're earning, we want to know how much we're spending, and then down at the bottom we want to know what's left over. And of course we want that to be a positive number. We want to have money left over at the end of the month, meaning that we didn't overspend what we earned. And in the accounting world, that what's left over piece is known as net income. So there you can see it looks very similar to how we would run a family budget. But in the business world, we break up our expenses a little further than that. For general purposes today, we'll keep it simple and just stick to two basic categories for our expenses. We have just our regular expenses, which we call general and administrative, or often abbreviated to G&A. And then up above, we have an additional expense category we call COGS, which stands for costs of goods sold. What this COGS category is it breaks out any of the expenses that are directly related to creating our products or providing our services. And it can be kind of complicated sometimes to determine what is or isn't a cost of goods sold or just a regular general and administrative expense. But to keep it simple, my general rule of thumb is if I closed the doors today and decided that today I wasn't going to sell any products, I wasn't going to build anything, would I still incur those costs? If I would, then it's a cost of goods sold. If I wouldn't, then it's a general and administrative expense. If I wouldn't incur those costs, it's a cost of goods sold. If I would incur those costs, it's a general and administrative. So let's take an example. Let's say I'm a furniture manufacturer. If I closed my doors just for today and I didn't build any furniture, would I still need to buy wood? I wouldn't, right? Because there's no reason to buy more wood if I'm not going to build anything. So wood is a cost of goods sold. I don't incur that cost unless I'm making product. How about wages? You can see that's kind of one of those areas that gets tricky. Because if I have my factory workers and I'm not building anything today, then I don't need my factory workers to come to work today. I'm not going to pay them to sit around if I'm not going to build anything. So their wages are a cost of goods sold because they're directly related to making the product. If they don't make product, I don't pay them. My secretary, however, I still pay her. I still want her in the office, greeting people when they come through the door, answering phones, managing the office. I still need her there. So regardless of whether I buy or sell or whether I sell products that day, I still need my secretary. So she is not a cost of goods sold because her salary is not directly tied to the manufacturing of products or providing of services. So that would be a general administrative expense. Rent is another general administrative expense. If I don't build any products, I still have to pay my rent. I still pay my utilities. Those kind of things are general administrative. Another kind of gray area is travel, especially in the services industry. If I'm a lawyer and I travel to my clients to provide services for them, I'm incurring costs directly related to my product because if I don't have clients to provide services for, I'm not going to travel to them. So those travel costs are a cost of goods sold. However, if I travel to a convention, that doesn't, I'll still go there whether I sell product today or not. So that is not a cost of goods sold. So that's how the cost of goods sold thing works. And the reason that we break out cost of goods sold is if we take income and minus the cost of goods sold, we get something called a gross margin. And the gross margin is kind of a mini net income. It's the net income of just your product. It tells you how profitable your products are all by themselves. And then you can take your general administrative expenses out, which tells you how much it costs to run your business, and you get your net income. So you can see the difference between what it costs to create and sell your products versus what it costs to run the business that sells those products. And that way, if you see your net income go up or down, you can start analyzing, okay, did it go up or down because of my product costs, or did it go up and down because I'm managing my business differently? So if you see your net income falling, you want to know, is it my product that has a problem? Is it just more expensive to make my product and I either need to find a more cost-effective way to make them or raise my prices? Or am I just getting lazy with the way that I manage my business? Or maybe it's that I'm investing more in my business to build more of an infrastructure to prepare for new growth. So understanding where in your business those expenses are being incurred helps you understand where you need to focus your attentions over the next upcoming month or year. So breaking out gross margin from net income is a very important analysis that small businesses can make. And now you understand the basics that go into a profit and loss statement, and hopefully that's going to help you read them better and help you analyze better the health of your business. Most accounting software will carry a profit and loss or income statement by default if you have accounting software. If not, you can build one yourself, simply breaking out your income, cost of goods sold, expenses, and net income. And be sure to stay tuned for our additional videos that will be covering the balance sheet and some other basic concepts of accounting.